So what is an APR, or an annual percentage rate, and why in the world is it higher than my interest rate? You don't know how many times I've heard that over the last 10 years from consumers, first-time home buyers, and people who have owned homes, 3 or 4, 5 homes they've owned, and they still don't get the exact difference between interest rate and APR. And it is very simple. So let's boil it down and make sure there's absolutely no confusion in your mind. Your interest rate, let's take a 30-year fixed loan, for example. On a 30-year fixed loan, your interest rate is the amount of interest you're going to pay that bank for 30 years. Fixed. Never going to change. That's your interest rate. That's the agreed upon rate between you and the bank for the loan terms that you've negotiated. Your APR is a combination of interest rate plus certain itemized closing costs that it costs you to get the loan, added up, and then divided over 30 years. So, at the end of your loan, let's say you started today in 2010 and you ended in 2040, and you look back and you say, okay, I paid 5% interest over that 30 years, but I also paid those closing costs up front. So interest rate plus closing costs divided over 30 years is an APR. So is your APR always going to be higher than your interest rate? Absolutely. 100%, right? Because you've got those closing costs there. Unless you did a no closing cost loan and there truly were no closing costs in order to get the loan. So what is it that affects an APR, or what is it that makes that APR rate higher than the interest rate? Well, of course, it's closing costs. So when you look at some sort of a financing proposal, a good faith estimate from a lender, you're going to see that there's typically an origination fee, a processing fee that pays appraiser, a underwriting fee that pays an underwriter, a title insurance policy, a title closing fee, and oftentimes there's some prepaid interest that needs to be paid when you settle your loan, when you go to closing. So remember, all of those fees, all of those closing costs affect the total amount that you're going to pay over the life of the loan. So it's very simple, but people try and overanalyze this, and they'll go, well, I'm paying my closing costs up front, but am I also paying this higher APR over 30 years? No, it's not both. It's interest rate plus closing costs over 30 years equals APR. So it's always going to be higher, right? Does that make sense? Okay, I hope you're with me there. Now, one last thing you should absolutely know about APR. If you're doing a fixed rate loan, your APR should be calculated exactly, and it should be perfect and correct over the life of the loan, unless you pay additional principal, right? So if you pay that loan off in 28 years instead of 30 years, well, then you'd have paid less than 5% for 30 years, which is how they calculate the APR. So if you prepay your loan, you make additional payments, your APR at the end of your loan could actually be lower than what we've disclosed to you up front. But we don't know how many extra payments you're going to make, okay? Second thing that can affect your APR, and when an APR is never accurate, is when you're doing an adjustable rate loan. And that's because, how do we calculate APR? Interest rate plus closing costs over the life of the loan. Well, we don't know what your interest rate's going to be if you're on an adjustable rate loan. If you're on a 30-year fixed, it's 6%. We know the rate. It's all good. But if you're on an adjustable rate loan, we don't know if that rate's going to 4 or going to 8, right? Whatever the fluctuations, whatever the loan program allows for it to fluctuate. So we've got whatever that rate ended up being over 30 years, plus your closing costs, gives you your APR. So we make a guess at that. There's a formula that we follow, gives us an educated guess. But just know, on an adjustable rate loan, your APR is never exactly correct. So, hope that helps. I hope you have no questions. You never wonder what an APR again is, and you understand why it's usually unless it's a no closing cost loan, always higher than your interest rate. And if you have any other questions, shoot me a call or email me. And I strongly encourage you. I've got 9 other of my most frequently asked questions. Put in your name and email address here, and I'll be happy to give you instant access to the rest of those questions. Happy house hunting up there. I hope to hear from you soon. Take care.